Egypt has announced plans to tap into the debt market for up to $2 billion of loans, including the Chinese-denominated Yuan Panda bonds. Well, as Yasser Hakim now reports, it is the second time the North African nation is resorting to Panda bonds after the success of its first $500 million issuance earlier in the year. Take a look.
Egypt's economy is still reeling from the ongoing geopolitical instabilities caused by the conflict in Eastern Europe. This has prompted authorities in Cairo to turn to the foreign markets once again to source up $2 billion of external financial assistance to boost forex liquidity and fund the country's budget.
The new financing is meant to help pay older debts and reschedule our repayment plan by 5 to 6 years till the economy has improved enough to comfortably pay off the loans.
A portion of the financing will be through the yuan-denominated Panda bonds that have been guaranteed by the China-led Asian Infrastructure Investment Bank. This is the second Panda bond issuance by Egypt after it successfully raised $500 million from its debut listing earlier in the year.
The high interest rate on US-denominated bonds increased the cost of debt on Eurobonds that we naturally issue. The importance of Panda bonds is that it's issued in yuan. It has lower cost on debt, less interest rates, and opens the door for working with new investors, that's the Chinese. All this benefits the economy.
Egypt's foreign debt has bloated over the last few years. To cover the growing budget deficit, the government announced it had paid off $52 billion of installments and interest rates on loans in just the last 2 years. A hefty sum for an economy suffering from acute dollar shortages.
We have 5 major hard currency sources: remittances from Egyptians abroad, exports, tourism, foreign direct investments, and revenue from Suez Canal. However, we had to resort to borrowing because inflationary expenses in 2022-2023 were much higher than income, and this caused the crisis.
But Egypt's finance minister has tried to ease public concerns about the mushrooming debt crisis.
We have outlined a plan because our debt is a high of 97% of the GDP. In 4 to 5 years, we expect to reduce it to about 75% or 80% of the GDP. It is an important plan because it enables the state to keep debt levels on a sustainable level.
Experts say a strict policy should be implemented to reduce debt levels.
The first step is to cut state expenditure, reduce costly infrastructure projects, focus on projects with short-term return, and increase private sector activity. The Egyptian economy is resilient with various revenue sources. Therefore, on the short term, we should focus on increasing remittances and tourism.
The government hopes by adopting a strategy that boosts government revenue, it can reduce foreign debt that has nearly doubled in the last half a decade to exceed $165 billion. Yasser Hakim for CGTN, Cairo.